Before we begin today, I want to say there are reverse mortgage calculators, and then there are point of sale tools to help increase your website visitors' engagement, making them more likely to do business with you. Today, we welcome our newest sponsor, Lenderful, who has just such a tool. Here's a short recap of what they do, and we'll be right back here in 30 seconds. See you soon. Housing Wire reports the Marin County Board of Supervisors in Northern California just last Tuesday approved reduced fees to build accessory dwelling units, or ADUs, in unincorporated parts of Marin County. That according to an announcement by county officials. Now, if you're not familiar with Marin County, it's situated just across the Golden Gate Bridge, north of San Francisco, and it's a notoriously expensive Tony housing market with a population of about 260,000 people, according to the latest U.S. Census data. And like many localities across the country, Marin County leaders are describing a housing crisis in their particular area that they hope to alleviate through more construction of ADUs. They especially aim to serve those that are undergoing life transitions, like seniors. Homeowners thinking about second units are often going through a life transition. Seniors transitioning to a fixed income, first-time homeowners looking for a way to afford a home, adults becoming empty nesters, looking for a solution to an overcrowded household, or seeking to create affordable housing for friends and family, said the county in an announcement of its new policy. The Marin County Board of Supervisors continues saying that an ADU can generate new rental income, help someone to age in place, help a financially strapped college student or recently discharged military veteran, or just simply provide a community benefit of a new home for anyone who does find themselves in need. Now, the new resolution was adopted by the Marin County Board of Supervisors last week, and it allows administrative staff to waive and reduce several types of fees for certain ADUs or accessory dwelling units through the end of 2024. Sounds like a pilot program. The hope is that the results will save applicants thousands of dollars in building permits, and roadway impact fees, especially for those units that qualify as affordable housing. Now, last year, the state of California made a major change, approved an update of their housing plan for the county that included a goal of producing 280 ADUs from 2023 to 2031. The county was deemed to be on the right track as permit applications for accessory dwelling units and junior accessory dwelling units, or living spaces that are built from an existing structure on the property, they actually increased from 35 in 2019 to 81 in 2023. But they have declined from a peak of 154 in 2021, and that's prompted a discussion about more incentives. Now, ADUs are becoming an increasingly popular option for those that are seeking a creative alternative to housing, especially those on the West Coast. Now, the reverse mortgage business has also become recently interested in the use of financing, such as the home equity conversion mortgage, or HECM, to help fund an ADU construction, although that avenue is not available for someone who is going to be living in the accessory dwelling unit itself. FHA has also taken notice of the potential between ADUs and reverse mortgages, and they've added ADU rental income to eligibility criteria for a reverse mortgage. They did that late last year, in a measure which was supported by the National Reverse Mortgage Lenders Association, or NRMLA. In other news, a federal judge in Manhattan has shed some new light on how much criminal restitution the embattled Richmond businessman Michael Hild may have to fork over. U.S. Magistrate Judge Catherine Parker just last week recommended that Hild should pay a total of $46 million to be divided out to a group of lenders and the bankruptcy estate of the now collapsed company, LiveWell Financial, a former reverse mortgage lender. That according to a report from Richmond BizSense. The restitution would be penance for Hild's conviction for defrauding the lenders through a scheme which intentionally overinflated the value of LiveWell's reverse mortgage bonds, which were sold on the market, and they used that to borrow more money, in fact, tens of millions of dollars. The scheme led to the collapse of the once fast-growing Chesterfield-based company that did reverse mortgages, known as LiveWell Financial, and Hild's arrest. Now, he's also been convicted, and he's been sentenced to serve 44 months in federal prison, but today he remains free on bond while he's appealing that guilty verdict. Judge Parker's recommendation stems from a long-running legal argument between federal prosecutors and Hild's defense team on just how much the restitution should be. The U.S. Attorney's Office initially called for $69 million, while Hild argued that the figure should be far less, of course, or even zero, he said. Now, with both sides at loggerheads for nearly 2 years, a U.S. District Judge Ronnie Abrams, who has overseen Hild's criminal case, passed the restitution matter on to Judge Parker, who then gathered evidence and heard testimony from Hild's 5 victims. In the end, Parker decided that a reasonable estimate of the restitution that Hild owes is $46.45 million, and that includes $17.79 million for ICBC, $13.36 million for Flagstar, and $7.39 million for Marire, and $7.64 million for Customers Bank, and $253,000 to LiveWell's estate. The recommendation did come despite Hild's arguments that no restitution should be owed to Flagstar, Marire, and Customers Bank, claiming that they and ICBC benefited financially from the holdings and bonds and reaping the interest payments after they essentially foreclosed on those bonds as collateral for the loans to LiveWell Financial. The lenders maintained they were harmed even after receiving some initial interest payments, and Parker agreed. Some share of that restitution will also apply to Hild's co-conspirators, who will be responsible for a portion of the payout, former LiveWell executives Eric Rohr and Darren Stumberger. They were charged alongside Hild in 2019, but pleaded guilty and agreed to cooperate with the prosecution and serve as a key government witness for the prosecution in Hild's trial. And as part of their conviction, Rohr and Stumberger were ordered to pay restitution to LiveWell's lender victims. Now, should Abrams memorialize the $46 million recommendation, it's quite unclear at the present what percentage Hild, Rohr, and Stumberger would each have to pay out of that judgment. Hild's appeal, meanwhile, is ongoing, and he asked for the verdict and his 44-month sentence to be overturned. Now, that case today is playing out in the U.S. District Court of Appeals for the Second Circuit. And in our final story for the week, reverse mortgage lenders and originators are not alone. Higher interest rates in recent weeks have made a big dent in housing activity, and it's brought down traditional mortgage demand. Mortgage applications dropped by 5.6% on a seasonally adjusted basis during the week ending February 23rd, that according to the Mortgage Bankers Association, or MBA's weekly mortgage application survey. But what that report omits is the fact that buyer demand, home buyer demand, as measured by the Mortgage Application Index to purchase a house, is at its lowest level in 3 decades. January's reading of 134 has not been seen since 1995. Higher rates in recent weeks have stalled activity, and last week it dropped more for those seeking FHA and VA refinances, said Mike Frattanoni, MBA Senior Vice President and Chief Economist, in a statement. And the most recent data from FHA's single-family production report reveals that traditional FHA mortgage application activity fell sharply from 71,449 units in November to 63,634 in December. Traditional FHA single-family applications have fallen dramatically from their high of May 2023 of 102,000 units. Now, while we're looking at FHA case numbers, of course, we did see the HECM application case numbers drop from 2,628 units to 2,269 units in November to December. And looking back at the traditional FHA mortgage market, it's said that purchase activity is about 12% lower than last year, but January's builder application survey shows that applications to purchase new homes were actually up 19% compared to last year. That may be due to the deep price cuts that many builders are offering. Now, that disparity continues to highlight the lack of existing inventory being consistent and pushing home prices even further. However, mortgage rates above 7% are certainly not helping. Mortgage rates were little changed last week, with the 30-year mortgage conforming rate declining slightly to about 7.04%, but remaining about a quarter percentage point higher than the beginning of 2024 at Frantononi. Now, purchase applications dropped by 5% from 1 week earlier on a seasonally adjusted basis, while refinance applications fell by 7% in the same period. I can't believe there's still refis out there today. And last week, refis accounted for 31.2% of all applications, down from 32.6% the previous week, says the MBA. The 30-year fixed-rate mortgage averaged 6.9% as of February 22nd, according to Freddie Mac's primary mortgage market survey. And as of Wednesday, the 30-year fixed rate on Housing Wire's Mortgage Rate Center, which is powered by Poly, stood at 7.26%. Now, all this data is not related to reverse mortgages, but yes, it is, because the traditional mortgage market and, of course, the home prices has a direct impact on reverse mortgage lending. Thanks so much for joining us for another episode of HECMWorld Weekly, the nation's only weekly podcast with reverse mortgage news for mortgage professionals like yourself. Don't forget you can listen to the audio version of this podcast, and don't forget to also thank our sponsor, our new sponsor, Lenderful, who has an amazing point-of-sale tool to help increase viewer engagement on your website, and they even have the means of doing an online application, believe it or not. So be sure to check that out. Click the banner on this page, and we'll see you here next week for more reverse mortgage news. Have a great week.